Walk us through some of those numbers which we were taking a look at on our wall. I mean, what did SurveyMonkey found?
So it's basically that we're in a place where 60% of people are calling themselves savers, and that's versus 54% in 2019, which is a really good trend, right? I mean, you saw when you went from March to April, you saw the savings rate grow to 30%, which is unprecedented. It's come back down to around 17, 18% in July. But I personally would really like to see that become a consistent force. And obviously we know that when people are saving and investing for the future and have a more balanced relationship between that and spending, people will have a better life.
The savings rate is something phenomenal to watch, and we hope there's more consistency in it. There's also some data on the number of Americans or the percentage of Americans who have had to either dip into or wipe out their emergency savings too.
That's right. I mean, the statistics are pretty staggering around emergency savings rates in the United States. It was hovering around 70% of Americans don't have $1,000 emergency fund. And when you get into situations like this, pandemics, downturns, whatever, you see the impacts of that type of challenge. So one of the things about Acorns, and we really encourage people to save and invest for the long term and think about that as a long-term thing and contribute really regularly so that you are in a better position during times like this. And so I think that brings this more into focus.
Noah, we've mentioned and should mention again, Comcast, NBC Universal is an investor in Acorns. And I look at what's happening during this period of time. Robinhood is kind of like hamburgers, I think, and Acorn in a way is like health food. People tend to focus on what they like to eat. As you were saying, over time, kind of consistent investment makes sense. Have you seen any kind of significant surge over the course of this year in user interest, user behavior as the market has gone through what it's gone through?
We have. I mean, as soon as the pandemic started to really take effect, we saw a nice surge in growth, and that maintained. And you've also seen a surge in trading behavior. I mean, when you look at the statistics around that, I think individuals trading has doubled since 2010. And for me, that's concerning because that indicates people looking for fast money, and as we know, the house always wins. So I'm encouraged to see people doubling down on saving and investing and committing to it. Obviously, when people are living day to day and paycheck to paycheck, it's tough to do that, especially during times like this. But, even if it's really small amounts, even if it's $10 a week or a couple bucks a day, whatever you can do, that's really what people should be focused on. And also getting into, our portfolios are all diversified portfolios of ETFs. BlackRock iShares is the #1 ETF. And so we believe really strongly in diversification and making sure you're in a portfolio of thousands of stocks and bonds so that you can weather storms and there's less risk.
Noah, it's Julia. Good to see you. You mentioned you're concerned about the surge in trading, and I know on CNBC we talk quite a bit about the increasing popularity of platforms like Robinhood. John just mentioned it. I'm wondering what you're doing right now to position yourself for growth of your sort of safer, more diversified option as a counter to Robinhood at a time when that may seem so appealing. Is there potential to grow and steal some of those users over to your platform over the rest of this year?
Yeah, I mean, thanks, Julia. We really just focused on that message of saving and investing for the long term and saving and investing for the future and diversification, and that having your eggs in multiple baskets versus all your eggs in one basket is a better way to maximize long-term returns. Obviously, again, we're in a moment right now where people are very focused on the present and the day-to-day. And so they're looking for a fast way to make fast money. Fast money is not really made. And I was just talking to a good friend of mine who lost all of his savings betting on the market actually last week, which is, obviously really disturbing. So we're just really doubling down and tripling down on that message. And on the edge, there's a lot of financial literacy content produced in partnership with CNBC, and also we produce in-house that encourages people to engage in this kind of behavior. And I think, one of the things when people see the market go down, even though it's come back up, people tend to panic. And we try to remind people that every downturn in history has ended in an upturn. This recent upturn is a good example of that. And I hope that sets another tone for people to say, long-term investing is really the right way to think about things.
Our parent, NBC Universal and Comcast Ventures, are both investors in Acorns. Noah, thanks. Appreciate it.